Do not panic. I really needed to start off this video by saying those words because once in a while we all need that reminder, because when there's market days where we see red in our portfolio, our favorite stocks are down massively in some cases, it's only natural, it's human instinct to think of fear, uncertainty, doubt, panic, and it's always nice to have someone out there be like, hey, calm down, put your emotions to the side. This is investing. We're here for the long term. We're here to make money over a long period of time. So don't sweat the small stuff. Don't worry about the day-to-day movement. Now, just a few days ago, I released this video and it didn't gain all that many views. However, the ones that did watch it, I think found a ton of value from this because I disclosed a few things in here regarding a possible quote-unquote market crash. Now, if you didn't watch that video, I'll summarize some of the quick points for you, but I would encourage you to go watch it after this to get my mindset as to, where the market is right now and what I'm expecting in detail for the year. But in summary, I expect, first off, no market crash really in 2021. I don't think we're going to see anything like a 30 to 40% crash like we did last year. I don't think that's going to happen. Secondly, I think we are overdue for a market correction. I would like to see a 10 to 20% correction. I think that would be a healthy move for the market. So that was something I talked about in there. And thirdly, whenever I wear this shirt, it's a serious topic. So you got to keep that in mind as well. But now anyways, that video was released just a few days ago, and who knows, maybe I have impeccable timing. Maybe I just got super lucky with the timing of that video. Or maybe I just saw some indicators out there that I need to share with you guys to help you prepare for what will inevitably be a market pullback. Now, when I was looking at the market today after it closed, I noticed something extremely interesting. These are the three indexes: the Dow, the S&P, and the NASDAQ. The Dow was actually green on the day. The S&P was down, but not by a whole lot. But then we have the NASDAQ, and oh man, that was down big. Now, depending on the type of investor you are, you either saw an extremely red day today if you're more of a speculative, high growth investor, or you saw a fairly neutral or possibly even green day today if you are a fairly conservative dividend investor. This is just how the market works. There's a lot of intricacies that go on behind the scenes, and that's why I keep saying if you're going to be investing in these high growth, high risk stocks, you got to be ready for the volatility, and days like this show us why. Now, some of you may have actually deployed some cash and done some buying today. Some of you may just sat on the sidelines and let your portfolio do its thing. Hopefully none of you panic sold today and locked in losses. That'd be the worst thing to do in these situations. But in the end, regardless, we're all in this together, and I want to actually share some perspective here. So why was the Dow green today, guys? What does this even mean? Well, the Dow is comprised of 30 different stocks, and these stocks are in different industries. We had stocks like financials that were actually green today. We had Caterpillar, it was green. Disney, it was green. Energy, it was green. So we had a good amount of components in the Dow that were green by quite a bit, offsetting the losses from any components that were red. And that's why we ended up with a green day in the Dow. Now, simultaneously, the S&P was kind of mixed. You have companies from all different sectors in there: financials, tech, you have energy, you have industrials, whatever, and it was more balanced in there. You had more tech, so it kind of pulled things down, and you had more financial, so it kind of pulled things back up, and it kind of balanced out to, a little bit on the red side, but fairly negligible for the day. But then we had the tech-heavy NASDAQ. This is the QQQs, and this index took the biggest hit, down almost 2.5% in a single trading day. And that's quite significant. Big tech was down, small tech was down, high growth was down, speculative tech stocks were down. If the stock was tech related, chances are it was down, and down quite a bit today. Now, here's a true visualization of it today. The tech bucket is in deep red, big sell-offs, whereas the other sectors were mixed. Some had, bright green spots in it. Some just had kind of neutral movement today. But what I want to show you guys is how remarkable it really is to visualize this, and it really gives us a good understanding of what's going on today. Simply put, what we saw in the market today was sector rotation. That means investors were taking money from one sector, they were selling off stocks there, and they were taking that money and rotating it into a different sector and buying stocks in there. Most notably, the high growth names that have been up, 10, 20, 50, 100% in the last year have taken big hits in the last day or two. The stocks have come down, and that money is now being put into recovery plays. You know, your airline stocks, your cruise line stocks, Disney with its theme parks, recovery play. These stocks are now finally starting to see some movement and start moving higher, while the traditional stay-at-home stocks or stocks that benefited in the last year are starting to see a pullback. Now, one thing that most new investors may not know is that this is very normal, and this happens all the time in the market. It's something that I personally have noticed over the years, where, you know, around earnings season, typically we see this sort of rotation. It's usually money that rotates from tech to financials and financials to tech, and you see those stocks kind of move in tandem. So all financials will go down, all tech will move up, or the reverse, all tech will go down, financials will go up. That's kind of what I see happen very regularly in the market. However, now, recently, because of the high volatility we've seen in the last year or so, these moves are just exaggerated so much more. When a certain sector is down, everyone notices that it's down. And when it's up, everyone notices that it's up. This volatility has pretty much amplified the movement between these stocks and, you know, how much they go up and down on a regular basis. And it makes it even clearer, to me at least, that this is just regular market movement, sector rotation. So I wouldn't necessarily go out there and panic, because like I said, this is something that happens all the time in the market. If you're new, maybe this is new to you, but this is why it's always smart to have stocks in different sectors. You know, buy stocks when they're on sale, buy different sectors when they're on sale, and then over time, your whole portfolio rises as money rotates. If it rotates from this sector to this sector, you still own both sectors, so you're still doing fine in the end. But anyways, as individual stock pickers, we gotta take advantage of days like this, because they don't come around too often, and more often than not, the market is green, because that's why the market trends up over time. So when we see days when the market's down 2.5%, like the Nasdaq's down 2.5%, it means that individual stocks are down much, much more, especially if they're tech stocks. And we gotta go through, comb through our watch list and find those gems. You gotta find stocks that are great businesses, that are not fundamentally changing, that are just selling off because the broader market's selling off. And sometimes you find these names that are already undervalued, but get pulled down even more. And sooner or later, investors will realize that, and those are the first ones to start recovering. For example, today, Facebook was down with the rest of the tech stocks, but investors started buying back in fairly quickly because Facebook is already undervalued. It's severely undervalued, and investors didn't want to let that go too much lower before they bought the dip on that. And I think we'll start seeing that play out over the next few days or weeks with these other tech stocks as well. This does not mean that every single stock that took a beating today will see a recovery fairly quick, because many stocks, high growth names specifically that are pre-revenue, which is ridiculous, or the fact that they're losing billions of dollars and their market is fairly small, but somehow everyone's convinced that these stocks are going to go to the moon, those kind of stocks may not see a recovery very soon. But when you look at your big tech stocks, when you look at your high growth names that are great businesses growing massively year over year, posting profits, posting positive free cash flow, those businesses I think will recover fairly quick. But that being said, guys, I'm not rushing into my purchases here. There is one stock I bought today, and I bought a decent tranche of this because it was down quite significantly. Here's a hint. The stock was down 9.99% today. So take a guess in the comments. Let me know if you have any idea what stock that was. I do plan to make more dedicated videos on that stock because it's actually one that I've been researching quite a bit recently. And it's been selling off over the last few weeks. And I think, you know, value is starting to show itself in this name. And over the long term, this will be a pretty big winner for me. So, I mean, I'm not going to get too much into that. I'll save that for a dedicated video. But there's a lot of exciting opportunities out there. That's what I want to try to get across today. Now, I do want to create another video today, hopefully, that'll go over some of the opportunities that I'm seeing. There's a lot of stocks that are down over 5% today that I want to just quickly touch upon, bring it up on your radar so you can monitor these and see if they're good plays for you. But guys, to make that happen, I need your support. I need this video to get as many likes as possible. I'm not going to put a solid number on it for this time. I'm going to keep it kind of open-ended, but impress me. Let's smash the like button down below. Let's try to get as many likes as possible. And in return, I will actually create a video tonight for you guys on some stocks that I'm watching very closely that have taken a big beating today. Anyways, thank you so much for your support, guys. I truly, truly appreciate it. Thanks for sticking around to the end as well. And remember, whenever you see this shirt, it's a serious topic and you want to pay close attention to it for future videos. Thanks so much for watching, guys. Don't forget to invest positively, and I'll see you in the next one.